Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan here in Tokyo's Marunouchi district. I'm Anthony Rowley, former president of the club, and I'll be acting as moderator of today's event. Today is another one of what we call our deep dive events, which, as many of you know, where we ask panels of experts to take a rather deeper look at issues of current interest than is normally possible at one of the club's regular press conferences. And today we're staying very close to home. We're looking at the prospects for Japan's own economy. So let me straight away, introduce our three eminent speakers who are joining us this morning, and I'll introduce them in the order in which they'll be speaking. So, joining us from New York, is Dr. Paul Sheard, who is a research fellow at the Harvard Kennedy School. He's a former vice chairman of S&P Global, and earlier he was chief economist at Standard & Poor's, Nomura Securities, and Lehman Brothers. Paul is a member of the World Economic Forum's Global Future Council on the new agenda for fiscal and monetary policy. He's a board member of the Foreign Policy Association and a member of the Bretton Woods Committee and the Economic Club of New York. So, welcome, Paul.
Thank you, Anthony.
And then we have, to my right here, Professor Naoyuki Yoshino, who is currently Professor Emeritus Economics at Keio University, Tokyo. And of course, he was a former Dean of the Asian Development Bank Institute, or ADBI, here in Tokyo. He's also an adjunct professor at the Graduate Research Institute for Policy Studies, GRIPS, in Tokyo. And then to my left, we're very happy to have, again, Jesper Koll, who is expert director at the Monex Group and the Japan Catalyst Fund. He's a senior advisor to the venture capital teams of D4V Tokyo and MIZMAA in Tel Aviv. Sorry, rather a mouthful. And also board member of the Okinawa Institute for Science and Technology. Jesper served formerly as chief economist and director of research at major US investment banks, Merrill Lynch and JP Morgan. So, why have we chosen to look at the Japanese economy at this particular moment? Well, hopefully we're coming to the end of the long, dark tunnel of the COVID-19 pandemic and the social restrictions it has brought. And we hopefully will see a pickup in economic activity and we'll be able to emerge into a bright new day. But will we? Or will some of the legacies that Japan took into the tunnel with it persist in the form of an aging and declining population, relatively low productivity, and tensions with neighbouring countries such as China and Korea? Will these continue to weigh on the trade and economic outlook for Japan? Well, I'm not the person to answer these questions or any other questions, so let me turn to the speakers, and we'll start off with Dr. Paul Sheard. Each speaker will have 15 minutes approximately, and at the end of that we'll open up for discussions and Q&A. So, Paul, if the floor is yours, please.
Thank you very much, Anthony. And let me just say what a great pleasure it is to be with you today, remotely from New York. Am I coming through loud and clear? And can you see my slides?
See the slide, yes.
Good, and you can hear me as well, obviously.
I can hear you quite well, but maybe we'll put the volume up a little bit.
Great, thank you. Well, first of all, yeah, I mean, let me just start by saying what a pleasure it is to be sharing the podium here, or, at a distance, not just with you, Anthony, a very, very dear old friend, but also Professor Yoshino and Jesper. Yoshino-san and I go back the best part of 30 years. I think we first met when we were both visiting the Bank of Japan back in the early 1990s. And of course, Jesper, a little bit less than that, maybe a quarter of a century. I've had the pleasure of knowing Jesper. So great to be with you, even though at a distance. And this is a deep dive series, but being based here in New York and sort of looking at Japan from afar, perhaps I'll sort of fly a little bit higher and make some sort of broad broader comments. First of all, to just look at just a level set in terms of what has been going on with the Japanese economy relative to the rest of the world. This chart shows you the path of real GDP of Japan, sort of the gray line, relative to the US, and I've just for comparative purposes included the UK here as a kind of, island economy, not too dissimilar to Japan in some ways, off the coast of Europe, indexed to 100 at the pre-COVID peak. And it gives you a sense of what kind of V-shaped recovery the different economies have been having. Now, one thing, if you put the magnifying glass on this chart, you will observe is that the peak, the pre-COVID peak for Japan actually occurred in the third quarter of 2019. Pretty much everywhere else in the world, it was the fourth quarter of 2019. And of course, that's because Japan had that little boost to its activity from the consumption tax hike in October of 2019. So Japan, the timing for Japan of COVID hitting, there's never any good time, but it was particularly bad for Japan because Japan was already decelerating after that consumption tax hike, and then of course got clobbered. The second thing that you can see from this chart is that Japan this time, particularly compared to the US, this time that is compared to the last major shock, global shock, which was the global financial crisis and Great Recession, is much more similar. The path is much more similar to the US. And the outlier here on this chart is the UK, which really has been clobbered. Back in 2008, 2009, Japan, which appeared to be a bit of a bystander to the financial crisis, actually suffered a very surprising drop in GDP, around about almost 9%. So this time it's a little bit more moderate, which is good news for Japan. Then the third point to note is the V-shaped recovery, that all the economies are recovering. But if you look at levels and also direction, whereas the US, of course, everybody had a very strong third quarter, then the fourth quarter, a bit more moderate. The US continued to recover into the first quarter of this year and is recovering and increasing in Q2. But Japan actually took a dip in Q1, and I think the betting is it probably is going to fall a little bit further in Q2. So the immediate near-term outlook seems to be a little bit more, a few more headwinds. But in the second half of the year, there should be a fairly strong recovery in Japan. Certainly, fingers crossed on that. But once we're through, Anthony, you mentioned, what's going to happen when the economies sort of get back to normal. Of course, there's a whole discussion about what normal will look like. But of course, the structural challenges that Japan has had, particularly the aging of the population, some of the other, structural reforms and whatnot, or the need for structural reforms, those things have not gone away. And of course, they're slow moving variables. But the one that I want to focus on here in the limited time is something that, I've been perhaps a little bit of a broken record on for the last 20 years, which is deflation in Japan. And if you look at Japan, from 40,000 feet, 60,000 feet, the thing that really stands out in the macro data is the fact that Japan's deflator, GDP deflator, you could use consumer price indices, but I'm using the deflator here, the broadest measure of the movement of the price level in the economy, has not even yet recovered its pre-deflation peak, which was the second quarter of 1994. So what this chart shows you, again, indexed to 100 at Japan's peak of its deflator, rising price level, compared to the US and the UK. And here you can see it's the UK and the US that are behaving similarly, and Japan is an incredible outlier. The GDP deflator in Japan is still about 11% below the level that it was a quarter of a century ago. And in the UK and the US, it's 65, 75% increase, which is kind of what you expect over a quarter of a century. And this is the whole idea of central banks backed by their governments aiming for around about 2% inflation per year, greasing the wheels of the economy over time. It accumulates to 10, 20, 30, 40, 50, in this case, 65, 75% increase in the overall price level. So as Japan comes out of this recession, gets back on its feet, this problem, this issue, and I don't want to pretend that it's the most important issue in the world. It's really a nominal issue rather than a real economy issue, but it still matters. This issue which was supposed to have been dealt with and solved by Abenomics and the Bank of Japan in particular, is still very much confronting Japan. Now, why is that? And I would argue that, well, it's really a policy error or a set of policy errors. And also, I think, kind of wrong-headed thinking about the fiscal challenges that Japan faces. And what do I mean by that? There is this recurrent kind of theme in Japan and worry and concern that there has to be an early move to fiscal consolidation because of rising government debt levels and the threat of a fiscal crisis. And there's also the idea that Japan needs to raise consumption tax rate already from 5 to 10% to somehow pay for the aging society. I think those two statements are kind of conventional wisdoms in Japan. I would, with all due respect, challenge both of them. And what I'm just showing on this chart is something I put in, updated a chart I used in an article in the Nikkei Keizai Kyoshitsu a little bit over a year ago, which is, yes, if you look at JGBs outstanding, they continue to go up, and you can see they've taken a leg up with COVID because budget deficits everywhere have increased. But the Bank of Japan, of course, having launched QQE under Governor Kuroda and then Prime Minister Abe, is holding, probably about half of the JGBs outstanding now. And the red line there shows you, so what are the JGBs that are outstanding in the hands of the public? And that is, of course, much less. And the difference is the amount of JGBs that the Bank of Japan has bought and therefore refinanced into central bank reserves, monetary base essentially, as part of the QQE. And the point about that red line is that, if you're concerned about Japan having some kind of fiscal crisis because of rising debt levels, it's totally under the control of the government to minimize the amount of government debt securities that possibly could even be a problem refinancing. They can essentially just refinance them themselves. Now, the normal argument, of course, in economics and in the central banking world would be to say, you can't do that. That would cause inflation. And that's probably true at some point, depending on how it's done. But that is exactly the challenge that Japan at a macro level has purportedly been trying to solve for the last 20 years or so, with various actions by the Bank of Japan, and of course most recently under Abenomics and continued under Prime Minister Suga. So I would argue, coming out of this COVID area, what I hope we don't see, but I fear that we will, is a reversion to the normal kind of orthodoxy of sort of economic thinking in Japan and elsewhere, that rising debt has to be brought under control. I would prioritize getting out of deflation and getting the economy on a mildly inflationary path before moving to a fiscal consolidation. In fact, I would counsel the opposite, if you like. That is, Japan may be cutting the consumption tax and trying to inject more household purchasing power into the economy. And what I've argued for the last few years is, from a policy perspective, I think that the government should commit to the same kind of overshoot commitment that the Bank of Japan has in its QQE with yield curve control framework, which is to say, cut the consumption tax and don't raise it, commit not to raise it until inflation of 2% has been achieved. in the same way that the Bank of Japan is committing to continue to expand the monetary base until it has overshot 2% inflation. And if you believe that's never going to happen, then the end point, reductio ad absurdum, is that there will be no JGBs left that can cause any fiscal problems, and you will not have actually reflated the economy. So it's kind of like the closest thing to a free lunch that Japan can expect. Just one more chart just to frame the discussion. You know, when I left Japan in 2006, but in a few years before I left, there was a raging debate about Japan's current account surplus was going to disappear. It did dip into negative territory back there in 2014. But here we are in 2021, Japan still runs a healthy current account surplus, most recently 3.7% of GDP in the first quarter. This is a 25-year long chart. Over this period, the current account surplus as a percent of GDP has averaged 2.8%, almost 3%. As probably most people on this call know, the current account essentially captures whether a country is generating net financial claims, if you like, lending to the rest of the world, or it's borrowing from the rest of the world. And Japan running a current account surplus still around 3%, 3.5%, means that Japan is still, in net terms, all the sectors together, including the government, is actually generating surplus savings, which are deployed to the rest of the world. It's another reason from a macro level not to be concerned about the rising debt levels in the government sector per se. I think we can sleep easily at night. I'm just going to pause there, maybe keep it just at this high level macro level. And I'm sure Professor Yoshino is going to go into probably some of the more aging issues, which are, if you like, real economy or structural issues, which are a different kind of challenge than the more macro sort of inflation versus deflation topic that I've chosen to focus on. Thank you very much.
Okay, well, thank you very much. Fascinating, most interesting points. I'm sure we'll want to return to some of those, the Q&A, but let's move on to Professor Yoshino, please, your presentation.
Okay, thank you very much. I would like to focus 3 points. The first one is green finance, green bond. And second one is I'd like to talk about JGB fiscal deficits. And third one is aging population of Japan. And first, I'd like to look at the SDG, ESG, and green bonds. Currently, Central Bank announced Bank of Japan is going to purchase green bond, just like other central banks. But I have some concern about current green bond and green finance. There are many rating agencies which define differently about ESG or greenness. Some of the rating agencies focusing on companies' ESG effort, some focusing on CO2 exposures and so on, and some focuses on disclosure, degree of disclosures, and so on. So in other words, based on the rating agencies, scores of ESG or scores of greenness are different one another. And traditionally, investors are looking at rate of return and risk, and then they chose the optimal portfolio allocation. Now, investors are asked to focus on not only risk and return, but also ESG or greenness. But depending on the rating agencies or consulting companies, ESG or greenness scores are different. So that means portfolio allocation will be distorted. In the second quadrant, there are two curves, two straight lines. One rating agency defines ESG of company A and company B like black line. And another rating agency defines ESG or greenness by blue line. Then investors have to look at not only risk and return, but also ESG or greenness scores. But depending on which rating agency or consulting companies they ask, the portfolio allocation will be different. And this is the empirical analysis. You can see 3 different rating agencies here. Then the third row is the portfolio allocation between company A and company B. If you see the third row, you can see 0.71, 0.74, and so on. So the portfolio allocation will be different. And that means current definition of ESG and greenness, which were defined differently by rating agency or consulting companies, will distort optimal portfolio allocation. Then what would be the best way to capture to these problems? Theoretically, the best way is greenhouse gas tax. And globally, the same tax rate, and to charge tax on CO2, NOx, and plastics. Then wherever the company is located, they will have the same tax rate, and then exposed tax return will become identical. So in other words, companies can go back to original return and risk profile. And recently, the modern technology, satellite photos, can capture how much CO2 is exposed from each company. So this kind of technology can identify the exposures of individuals and companies. So that can be possible to make greenhouse gas tax globally. That is one proposal. And another one is unified green credit rating. Currently, different consulting companies, different rating agencies have their own criteria to evaluate ESG or greenness. But unified credit rating will be definitely needed. Then nobody worry about whichever consulting company they ask, that each company will be evaluated in the same way. And same thing can be applied to green bond. There are 10 criteria for green bond initiated by Europe. If some of those points are satisfied, company can issue green bond. Some of the green bond, 90% green, 10% gray, that can be called green bond. 80% green, 20% gray, as long as some of the component of these 10 will be satisfied, it is also be possible to issue green bond. So if central bank started by green bond in current definition, then that will definitely distort portfolio allocation. So that can be applied to the central bank purchase of a bond. And also green banking will be the same. Some of the green bond is, again, 80% green, 20% green. And then banks are talking about, we are focusing on green finance, but that will distort the optimal portfolio allocation. So two things will be important. One is unified single green credit rating, or GHG, greenhouse gas tax, globally. So those would be the solution to come back to optimal portfolio allocation. And also the ESG scores and stock prices do not necessarily go together. Some research says they are positively related, but it is not. If we look at these three rating agencies, only the middle one has positive correlation, greenness and ESG score and stock price, but other companies are not. The reason is when the company is targeting to ESG, for example, some companies would like to invest their portfolio up to 30% related to greenness or ESG. And once they achieve those targets, they will come back to risk and return portfolio. So while they are seeking for the target, then stock price and greenness may be positively correlated. But once they achieve those goals, then the stock price will come back again, risk and return. Second one is about JGB market. Koll Sheard has already pointed out, but I have been the chairman of the JGB Council at the Ministry of Finance for more than 20 years. So I'm looking at the JGB market from the beginning. And then this is 2013. Bank of Japan only held about 70%. The light green is BOJ, and dark green is banks, blue is insurance pensions, and light blue is pension funds. And overseas investors about 10, 12% in left-hand side top. However, 2019 fourth quarter, you can see on the right, short-term government bonds more than 70% held by overseas investors. And that is very different from 2013. Short-term bond, if you look at the red one, more than 70% of the Japanese JGBs are held by overseas investors. The reason is it is negative interest rate. So Japanese do not want to hold it, but foreign investors can get by fluctuations of the exchange rate. So there's a lot of ways to earn profits by exchanging from dollar or foreign currency to Japanese bond. That's why majority of JGB market in short term are dominated by foreign investors. This is a very big concern in future. Many people would know Greece went into bankrupt. Japan is still sustained. So this is the debt to GDP ratio. Left-hand side top is Japan. Second one is Greece. Third one is Italy. And why Japan is still sustained? When Greece has faced with uncertainty, the interest rate of Greece is the perplex line, went up to 30%. Mm-hmm. Japan's interest rate is the bottom, black one. It is close to zero, and now it is negative. Japanese interest rates are always stable compared to Greece or Italy or Portuguese, because majority of the investors came from Japan, and they cannot escape from Japanese yen to other foreign currencies because most of their liabilities, deposits, insurance are Japanese yen. Then they would like to avoid foreign exchange risks. And Greece case on the right-hand side, 70% of their debt are held by overseas investors. In Japanese case, still it was stable, but as I said, in the short-term government bonds market, it is becoming like Greece. Of course, long-term government bonds market, it is stable. So one of the concern is if Central Bank of Japan stops purchasing government bonds, then we have to find out the domestic investors to compensate for their holdings of government bonds. And last topic is about aging population of Japan. This is the budget spending right before COVID-19, so normal time. More than 1/3 of our government spending goes to social welfare. 34%, 35% on the right-hand side goes to social welfare. And bottom white part on the right is transfer from central government to local government. So two expenditures are largest in Japan. One is social welfare. Second one is transfer from central government to local government. If we add together, it is about 50% of the budget. So if these two can be shrunk, then our budget deficit will be sustainable. So we have to reduce social welfare and also transfer from central government to local government. If we cut all of them, then our budget deficits will all gone and it will be stable in the budget. So structural policy, we have to do two things. One is reduce social welfare. Second one is local government autonomy. They should do their own efforts to revitalize their economy rather than relying on central government. Then 50% of the budget can be cut. That will make Japanese budget deficits into good shape. Then this social welfare is related to aging population. In this diagram, I used DSGE model. If we go to the left, then that is the aging population becomes bigger and bigger. So of course, consumption will become smaller and GDP will become less. And when we are facing with aging population, I found out effectiveness of monetary policy diminishes significantly because the monetary policy will be affecting to investment, interest rate, and so on. That has a strong impact on working population because manufacturing service sector will be encouraged to their investment and sales activities. So those who are outside of the employment, retired person, they are not affected by monetary policy. Lower interest rate would negatively affect to retired people because they are relying on accumulated their deposits and so on. Most of the Japanese people put their money into deposits. So lower interest rate will affect to their income to be lowered. So monetary policy effectiveness will decline drastically. Secondly, fiscal policy also diminishes drastically. Fiscal policy will create jobs and then give income to them, consumption will be accelerated. But retired people are not looking for jobs. So fiscal policy, like in the United States, will not so effective. This is the multiplier which I looked at. Left-hand side is the non-aging economy. Then long-term fiscal multiplier is 1.5. Right-hand side is aging society. Multiplier is less than 1, 0.6. So 1 trillion yen cannot produce more than 1 trillion yen GDP. So I think that is the reason why Japan's economy is so slow to recover despite fiscal and monetary policy. So it is important to do structural policy. Then my proposal is retirement should be postpone retirement age to make people to work as long as possible. But wage rate has to be based on productivity. Japan has introduced seniority wage rate system. So if people becomes older, then they are paid higher salaries. That should be stopped. And then postpone the retirement age. So reducing the retired people as much as we can, and that will reduce our social welfare expenditure. And at the same time, transfer from central to local government should be reduced by making local government to do their own financing, such as crowdfunding and others, and rather than relying on public finance. And that can recover the Japanese economy. So that's all my point. Thank you very much.
Thank you very much. Great deal of food for thought there. Jesper, more food for thought?
No, excellent. And I want to thank, Paul and Yoshino sensei for really this excellent overview from the macroeconomic perspective. And as Yoshino sensei just pointed out, when you talk about Japan's macroeconomy, I always sometimes feel like, my God, sort of you're in a bit in a time warp, right? Because the same discussion we could have had 5 years ago or 10 years ago, when I remember Yoshino sensei, we were on a panel, and of course you strongly advocated, the need for structural policies. So with having said this, I want to sort of change the path of the discussion a little bit and, shed a little bit of optimistic outlook into this. And I actually think that the COVID crisis over the last year and a half has actually been a spectacular catalyst, even more so than the 3/11 disaster, the Fukushima crisis was, because obviously the COVID crisis affected every aspect of the Japanese economy, while the Tohoku disaster, affected only some very specific industries. And this COVID as a catalyst coming exactly at a sweet spot where in the microeconomy, in the corporate leadership, you actually have a very important generational change. And I think as a result of that, I actually think that there is now good evidence, right, that COVID has been a catalyst and that Japan is poised for above expectations, positive, earnings growth, as well as positive economic performance. Let's have a look at some of the facts here. The first one is that we've got to remember that Japan went into the COVID crisis with basically 25 years of continued restructuring, right? The high cost base of corporate Japan, kaizen, step by step, has actually been cut. If you look at the data, if I got my maths halfway correct, it used to be that Japanese listed companies needed sales growth of around 1.5% to 2% to make profits increase. That Sonneki Bunkiten, the break-even points for profitability, has now been cut, and on my calculations, even if sales growth is only about 0.5%, now corporate profits can rise. So number one, Japan is in an excellent position because 25 years of corporate restructuring, of lowering the cost base, are actually bearing fruit. The second reason for optimism is that corporate Japan has actually globalized and has become much more balanced. What do I mean by that? You find that until 10 years ago, about 50% of Japan's listed companies' profits were dependent on the United States of America. It was, the car parts sector that were very profitable, that made about 50% of Japan's corporate profits. With all the investment that Japan undertook over the last 20 years into Asia Pacific, as well as, yes, the People's Republic of China, you now have a much greater balance. The United States now accounts for about 24% of listed companies' profits. The People's Republic of China accounts for about 23%, and the rest of Asia for about 21%. So a much greater balance. Just to give you one example, Toyota's factories in China have an operating profit margin that is 3 times higher than that of the United States of America. What that means is that, of course, for the corporate sector, there is much, much greater balance. You're no longer as dependent as you were on the United States, as you had been before. Remember, we used to say when America sneezes, Japan catches a cold. This is now no longer the case. So you've got successful restructuring. You've got, in terms of a lower cost base, you've got at the same time very successful regional diversification. And as a result of that, you're going to get now a big bonus. Because what do we know, Anthony, coming out of the COVID crisis? There's an enormous policy urge led by the United States of America, which has become now an interventionist government, right, under Joe Biden. And it's all about, you got to change your supply chain away from China. Well, if American companies are forced to change their supply chain from China, guess who's going to be the big beneficiary? And I urge you to look at the Japanese machinery and capital goods companies. Their orders are going through the roof as we speak, precisely because of this new geopolitics, right? The US-China, forced change in the supply chain is excellent news, for corporate Japan. So you've got that. One final point on the successful restructuring. Japan has an unbelievably healthy banking system. Please note, and Paul alluded to that when he very kindly showed the chart of the current account surplus running at 2.8 to 3% of GDP. Japan is a net creditor to the system. One little unknown fact, Japanese banks have been the largest creditor in non-China Asia for 3 years running now, which is very, very interesting. So you've got a restructured corporate sector with a very, very cost-effective, profitability outlook, globally well diversified, and you've got a banking system that is unbelievably strong and a huge net creditor to the overall system. Now, COVID as a catalyst. Let's look at the data. M&A levels, domestic M&A is running 2 times the annual average over the last decade, over the last year and a half. There is a boom in domestic mergers and acquisitions that is going on here. This is industry by industry by industry streamlining itself, with COVID having become a big catalyst there. So record, M&A activity. Corporate formation. Typically, the Japanese economy creates, of the existing companies, there's about 3.6 million companies in Japan. Typically, every year, about 5% of new companies of this 3.6 million, 5%, is being created. Over the last 18 months, it's been running at 8%. Enormous boom in corporate formation that is actually going on. So M&A, corporate formation. Finally, in terms of the corporate metabolism, a huge pickup in venture capital financing. Typically, over the last 10 years, venture capitalists finance about 800 to 1,000 companies in Japan. Over the last 18 months, this has accelerated to 2,500 companies being funded by venture capitalists. So you can see this catalyst that is actually happening here. Watch out. Corporate Japan is undergoing massive change. And by the way, it's topical to talk about Toshiba, right? And you can pick your cause, right? You can go and say, ooh, it's a victory for corporate governance, or you can be like Meti and say, oh my God, it's terrible for the national interest. Don't be blinded by Toshiba. Much more important is the fact that you've got a company like Panasonic, for example, cashing in the profit that they made from buying Tesla stock, right? Buying it low, selling it high, and using the proceeds to fundamentally change the way Panasonic is going to look like. They bought Blue Yonder, right, a software company. So Panasonic, as a hardware engineering company, finally is making a big bet to actually become a software company. And this is very, very important. You see that, right, actually coming through. You see it with Hitachi Corporation, very, very similar. Just last week, Hitachi Corporation making a big announcement, a big commitment, right, to jump on the American infrastructure investment boom, right, and commit, more capital, more people, more engineers, towards the boom or the expected boom in infrastructure investment in the United States of America. So the message here, you've got strong corporations, you've got strong banks, and you've got evidence that indeed the structure of the Japanese economy, because of new corporate formation, because of venture capital, and because of the existing dinosaurs, the established companies, actually taking meaningful action. And that is why I'm extremely bullish, on the overall outlook. For 30 seconds, before we open it up for a discussion that I'm looking very much forward to, on the policy side, I think the great news is that I don't know whether you like Suga or not. Actually, I don't care. They're incredibly pragmatic. There's nothing weird that is going on. Policy, and Paul was very, very good on this, throughout the 1990s, both the Ministry of Finance and the Bank of Japan, I'm going to use the word, had religion. They followed some sort of dogma, right, that in the end, ensnared Japan in this deflationary spiral that Japan was in. This is completely absent. As you know, Prime Minister Suga is committed to not increasing the VAT, the consumption tax, for at least another decade. I think now 1 year has passed, so it's another 9 years before the tax is going up. If you look at the Strategic Council report just released last week, very, very soft emphasis on fiscal consolidation, with even the Ministry of Finance basically backpedaling and say, well, fiscal consolidation is no longer a top priority that Japan actually has. So from that perspective, I think that you do actually see great policy pragmatism, on the part of the government. And in my personal opinion, the fact that Meti is back in the game of wanting to revitalize Japan's semiconductor industry by providing sweeteners as they are courting TMC from Taiwan, right? For all intents and purposes, that again, in my book, is actually good national economic policy, because yes, it is true that in the semiconductor business, Japan has been sleepy over the last decade. It's time to beef this up, and there are great opportunities for joint cooperation between, for example, Taiwan and China, on that sort of side. So you've got policy pragmatism, and in my book, you've got an industrial policy activism that actually is going to serve the overall country very well. So there you have it. I look forward to the debate here, but the message is very straightforward. The last 18 months have been a big catalyst for corporate change. The corporate metabolism is up. Decisions are being made. It's not just presentations, but it's action in the corporate financial world, in the M&A market, in the venture capital market. That's why you need to be bullish on Japan post-COVID. End of story.
Not quite the end of the story. Okay, well, I almost feel we're talking about two different countries here. Actually, there's the Japan, which Paul has talked about, where you have ongoing deflation and you need perhaps a more vigorous fiscal policy, fiscal expansion. We've heard Professor Yoshino talk about the need for structural change and so on. And then we've heard about this vibrant, energetic new Japan that's emerging, especially on the corporate side. So let's just say right at the outset, if anyone has a question, either from the floor or online, please raise your hand or send your question. Any questions? You have a question? Yes, okay, go ahead, please. As usual, state your name and affiliation.
Well, thank you very much, Dr. Yoshino, Jesper, and Paul-san. I have a question from, my name is Yusuke Wada, associate member here, and I have a question to Dr. Yoshino about the old age system in Japan. You said the delaying the retirement age and wage should be based on productivity. But what is your view on the Japanese retirement force going back to the workforce? There is a problem of senility because I'm in the death industry right now. Thank you very much.
Okay. Thank you. I think Principal Koll was talking about good things about corporate sector and banking sector, but still we have aging problem that cannot be solved by corporations nor banking sector. And I think, for example, if I look at the Japanese banks, most of the people who have experience about the bubble in the late 1980s has retired. And many young generations do not know what bubble was. And currently, Japanese banks are making profits not on their lending, but from securities investments. So they are making lots of money, but there may be some tendency of small bubble because of very easy monetary policy. I think in many areas, experienced and all the employee has lots of experience that they don't have to come to the office every day. They can come all other day or just in the morning. And when the young people are discussing, they can talk about their experience in back in late 1980s, what has happened. They have all their knowledges. So I think those kind of mixture of young generation and elderly experiences will be very important to encourage and improve their performances. That not only apply to banking business, but other businesses, manufacturing, and so on. So I think we can utilize those elderly people. We are not asking them to work just like young people. They have their own skill and knowledge that should be utilized. Then they have their own, that all their children were all graduated. So if himself and his wife can make a living, and that is enough. So that means based on their wage-based, productivity-based wage rate, and they can contribute to many things. Or another one is some of the engineers who has good knowledge in physics or mathematics. They can teach to the children in their neighborhoods, and then that would also benefit the quality of education. Thank you very much.
Can I chime into this? So this is interesting, right? Because you mentioned that banks cannot solve the demographic problem, but I would just, for argument's sake, right? The demographics is the solution for the banks. For example, take the bank that owns this building here, the Red Bank. Because of the baby boomers moving into retirement, their employees, the number of employees will drop from about 40,000 to 19,000 by the year 2025. That is a huge cost saving, and it comes at a time when fintech, when computerized solutions, right, actually can easily accommodate, right, the human capital input that was previously required. I think obviously Yoshino Sensei is right that the human interaction is something that's very, very important, right? But I would point out that the demographic side, I'm not worried about getting older. Right? I'm not worried about the age structure in Japan because effectively the old people are very rich. What I am worried about the demographics is the skills shortage that the Japanese younger generation actually has. And of course, this skill shortage is going to become more and more pronounced as machine learning, AI, etc., progresses. So the most scary number, right, is the fact that Japan has a shortage, right, of IT engineers, and that shortage is going to continue to grow, right? Just by definition, because the need for IT engineers is going to continue to grow, but at the same time, the number of Japanese entering university, right, is obviously, you know, for demographic reasons, structurally in decline. So that is, I think, the real demographic problem that Japan has. I'm not worried about the old, I'm worried about the young.
Okay, Paul, I wonder if we could just turn to you briefly. I mean, Jesper has talked about the fact that the economy is undergoing reforms here. It's undergoing reforms at the corporate level and in terms of productivity and efficiency and so on. That being the case, what are the policy priorities? I mean, these reforms are not going to bear fruit for some time, presumably. So how concerned are you in the meantime about the problem of deflation, for instance, the need for perhaps greater fiscal stimulus? What's the net in your view?
Thanks very much, Anthony. Let me pick up on a couple of points. And, you know, whenever you start talking about deflation and show charts like the GDP deflator in Japan, it's almost taken for granted that you've got this very negative kind of outlook. You know, half of me is very much in Jesper's camp, that I'm actually quite positive about Japan and its future. And actually, you know, I wrote a book published in 2000 called Keio Mega Saihen, sort of, you know, giant corporate restructuring, published from Toyo Keizai Shimposha, and making the case that, you know, there'd been a revolution in Japan's sort of corporate governance framework. I won't go into the gory details, but the whole of the 1990s was a transformative decade in terms of essentially giving corporate management in Japan a different and very well articulated toolkit to do restructuring, and then of course unleashing pressure from the capital markets with all of the you know, big bang reforms and asset management industry reforms. And here we are 21 years later. Hopefully, I hope Jesper's right, you know, these things take a long time for these wheels to turn, kind of seeing some of the fruits of that, of those changes. You know, old habits die hard. But I'm positive about that. I'm also you know, the way I look at the aging issue, which Professor Yoshino touched on, I do think we have to get away from sort of framing this as a kind of problem and a crisis. And Japan doesn't have a monopoly on this. You hear the same rhetoric in you know, even in the US with looming fiscal crises and things like that. You know, the aging of the Japanese society is a fact, and I can remember actually when I was doing my PhD, or maybe just finished it, way back in the mid-1980s, attending a conference at the ANU where I was based, where the Japanese economists all came in and were talking about the aging of the Japanese society. And I can remember the Australian labor economists saying, I can't believe these numbers that these Japanese professors are throwing out there. Surely Japan can't be aging on this trajectory. You know, the point of that story being, you know, this was all known about in the mid-1980s, if not before. So Japan's had a long time to prepare for this. Aging, you can do a few things about it. You know, immigration, we haven't talked about immigration, but if you look at the combined population of, you know, Vietnam, Cambodia, Laos, I think those three will do it. You almost get to Japan's population, not even talking about China or other economies, and it's a young population. Japan, India, of course, talking of the IT sector. Japan, if it implements a smart immigration policy, let's face it, can really pick and choose. And being able to come to a country like Japan, which has so many strengths for young, ambitious, well-educated, aspiring young Asians, you know, is something that people will compete for. So again, I'm not too worried about aging as a problem. The question is, you know, how is it handled? And in terms of, you know, fast forward 30 years or 40 years, what is going to determine this, you know, how Japan, is prospering or otherwise under this much, older demographic structure will be what kind of physical capital, human capital, technological capital, intellectual capital, and social capital Japan has, because it's all of those things together which will determine how productive Japan is able to be in supplying the goods and services that its older population will be demanding at that point in time. And that, with all due respect to Professor Yoshino on the fiscal side, has nothing to do with bits of paper called JGBs, which actually are just electronic entries in computers, 0-1s in computers. So I think that was my appeal to let's get past this kind of concern we have about fiscal issues. It is not a concern. And I just want to pick up on one point. Sorry, I've steered a little bit off course, but just I can't resist. I mean, Professor Yoshino made some great points, and I think interesting discussion on ESG and greenness we could come back to. But just on this Greece-Japan comparison, that is a fallacious comparison. Japan, of course, Greece, as you know, is a member of the Eurozone. And what that effectively means, that the Eurozone is a construct such that it is as if the 19 members of the Eurozone have to borrow in a foreign currency. And if you have to borrow in a foreign currency, all your debts are denominated in euros, you don't control that printing press, then you can have a debt crisis. Japan, of course, controls its own printing press. And the very fact that we have, these seemingly, ridiculous debt to GDP ratios, by the way, a very flawed metric in my view, and yet the Bank of Japan is able to peg 10-year JGB yields at around 0%. It just tells you how different the situation is that Japan is in from a country from Greece. This argument, this parallel to Greece, we could be next. That was the argument that was marshaled back in 2012 to kind of steamroll the politicians into passing the consumption tax legislation to double the consumption tax from 5 to 10%. But last point, which I think was a huge mistake. And I argued for the last 10 years, don't do it. Now that they've done it, I would argue, cut it and inject that purchasing power into the economy. My optimistic spin, just closing, Anthony, on the deflation picture is, unlike aging and structural reform and innovation, which are kind of difficult, slow-moving things to influence, this reflation agenda in Japan is actually very easy to achieve. You might say, well, hold on a minute, why didn't the Bank of Japan achieve it? And I'll tell you, because the fiscal side was not cooperating and was actually stymieing it. But in theory, maybe, and I think in practice, it's a problem that, is pretty easy to solve. And, if you do solve it, I think you just have a much, much better macroeconomic backdrop for all of the structural things that have been talked about, particularly with Jesper, to take place. That's why we have a 2% inflation target as the norm in the world. There is a recognition that a little bit of inflation, which is essentially driven by governments and central banks being able to convince their publics, their populations, that they are committed to a certain inflation target rather than validating a very low level of inflation, that just provides a much better backdrop for everything else. But it's very doable. And therefore, that does make me actually optimistic. And I do take the point that Jesper made that, in terms of behavior, if you look at what the Japanese are actually doing now, rather than saying, it is as if, in some sense, they've embraced a kind of MMT, a view of the world. But my point is, it would be much better to match action with words and kind of philosophy and sort of a belief system, rather than sort of enunciate one narrative and then actually, in terms of your actions, do something that's quite different and which is actually desirable.
Thank you. Yes. I think, as Paul Sheard said, human capital and technology capital, Japan has a lot in the past. However, deflation is also related with aging population. elderly people consume less compared to young, then the aggregate demand will shrink as the population is aging. And deflation in current moment is very positive for the Japanese fiscal side, because interest payment on government debt is very small, despite its huge accumulation government of debt, because of deflation and low interest rate. And secondly, fiscal policy, as I showed my estimation, multiplier effect becomes very small when the population is aging, because retired people will not be benefited by public works or other fiscal policies. So that also, that tool of accelerating fiscal policy in Japan currently will not have as big impact as other nations. And lastly, as you mentioned, Greece and Japan are very different situations, but stability of Japanese JGB market came from, most of the demand came from domestic market in the past compared to foreign investors. That is very important for the stability of the bond market. Thank you.
Okay, I have a question, but first, any more questions from the floor? Any questions from the floor, or from no questions online at the moment? No. Well, I was intrigued by your phrase, Paul, that, you know, reflation is, I think you said reflation is very doable. But how? I mean, you know, the Bank of Japan has been trying so hard for so long. So if you were governor of the Bank of Japan, or if you were the finance minister, what would you do in order to get reflation back in Japan?
Thanks, Anthony. And you know, I don't want to dwell on this too much, because there are actually probably more interesting topics that have been put on the table. But the basic theory of, you know, how do central banks backed by their governments achieve an inflation target, call it, you know, typically 2%. The modern theory of that, it really revolves around the concept that the central bank and the government is able to manage or anchor the inflation expectations of the public. So the key driver of future inflation, because the inflation rate is a nominal variable and it's intrinsically arbitrary. It doesn't really matter in some sense, whether it's 1 or 2% or 3%. It's an arbitrary number, although we think 2% is desirable for various reasons. But the key thing is that inflation is largely a self-reinforcing, a self-fulfilling prophecy. So the whole theory of modern inflation targeting is that central banks announce an inflation target. The public observes that and says, oh, the Bank of Japan wants 2% inflation. Now, if that's credible, and what does credible mean? Credible means that the public says, let's use the Japan experience. The Bank of Japan both has the tools to achieve 2% inflation and is determined, absolutely determined, to deploy those tools to achieve it. If that's the case, then, you know, it's kind of natural for the public to then coordinate their own inflation expectations on 2%, and then you get 2%. What went wrong in Japan? It's not just the government, it's not just the Bank of Japan here, sorry, it's also the government also playing ball. In other words, if the government as well as the central bank says, together we are going to achieve 2%. In other words, we're not going to use fiscal policy in a way which is inimical to achieving reflation. We're going to cooperate with the central bank. Well, what happened under the 8 years of Abenomics? The Bank of Japan did its thing, expanded its balance sheet dramatically, but that was used as a kind of Trojan horse for the government, the fiscal authorities, to double the consumption tax, 5% to 10%. It's the dumbest thing in the world if you're trying to get out of that entrenched deflation and convince the public that you're determined to move to 2%, to drain consumer purchasing power. That's what they did. So naturally, the public doesn't trust the government and the Bank of Japan together when they say, yeah, we're really determined to achieve 2%. Now, what would I do? I would do something like the following. The government should cut the consumption tax to 0 and announce that it is not going to raise the consumption tax until, you know, well after you get to 2%. And the Bank of Japan should essentially say, we stand ready to refinance buy up every JGB in existence, both a stock and a flow. And if you do those two things, and with the explicit aim of, as Governor Kuroda used to explain this, dislodging the public's inflation expectations from where they are, around about 0%, raising them up to 2% and re-anchoring them. And if you think that that's not going to work, and many people think, no, that's not going to work, well, the worst thing that can happen is there are no JGBs in existence in the public's portfolios. And if there are no JGBs out there, how in the devil could you get a fiscal crisis? There's nothing to default on. So this is a kind of win-win free lunch situation. But I believe that before you got to the point of the Bank of Japan owning every JGB on the planet, the public would be convinced that these guys do mean business, and inflation expectations would start to rise, and that would lift actual inflation. That would not solve all of the other problems and challenges, aging, innovation, structural reform, but it just means Japan from a macro perspective is now normalized, and it's a more favorable backdrop for all of the things that that Japan otherwise needs to do.
Can I comment?
Yeah, go ahead.
Okay. Thank you. I think a tailored rule of the monetary policy focuses on two things. One is stable rate of inflation and reducing GDP gap. And recently, many central banks are watching 2% goal of inflation. And most of the models which focusing on this monetary policy is looking at financial market and conduct of monetary policy without including fiscal side into the model. If 2% inflation were achieved, social welfare of Japan has to be increased every year because it's inflation indexed. And interest payment on government bonds will become enormous. So that will increase huge budget spending. So it is fortunate currently in Japan, inflation is close to zero. That can avoid explosion of social welfare and interest burden for the government. So I think Paul Sheard was talking about very extreme case. Central bank can keep on purchasing government bonds and MMT theorem. But I think MMT theorem is also assuming in the long run, those money has to be financed by increase of tax. Otherwise, debt cannot be diminished. So I think in eventually, Ricardian neutrality has to be satisfied. So I think 2% inflation is one way to look at the goal of monetary policy. But fortunately in Japan, lower than 2% is very good for current fiscal policy side. Thank you.
So policymakers' dilemma then, how to get this economy moving if the deflationary psychology persists.
And Anthony, Anthony, sorry, I don't want to claim the last word, but just maybe to help frame this for the audience. Okay. I think I think Yoshino-san and myself will have to agree to disagree. But one way to understand it is I think that I see these fiscal metrics and fiscal policy as a means to an end. I think Professor Yoshino seems to be positioning, as is traditional, the sort of the budget deficit and debt burdens and all these fiscal metrics almost as an end in themselves. That's a different way of thinking about it. But we could probably continue this discussion all day or all night and not necessarily agree.
Okay, let's turn Jesper then.
No, I just think I love these discussions because we've been having them in Japan for the last 30 years, right? Okay. And I think it's greater testimony to the poverty of macroeconomic thinking and modeling, right, than to what actually goes on in reality. Because again, in reality, there are two things. I don't want inflation. Why would I want inflation? I love the fact that Prime Minister Suga and his previous gang cut my healthcare costs every year by about 1.5% to 2%. I love the fact that Prime Minister Suga stands up to the CEOs of the telecommunication companies and says, you are gorging. Prices are 40% more expensive for a mobile contract than they are anywhere else in the world. Cut it. I love the redistribution of corporate earnings, right, into the purchasing power of the people, which is exactly what Japan is doing. Japan is actually doing what Mr. Piketty, his little Marxist thinking, right, is proclaiming. The second thing that's very important in my hat as a venture capitalist, right, trust me, there is plenty of technology, right, that can disrupt and offer much better services, much better products at much lower prices, right? If I can only let loose, right, on the sort of disruption and get the distribution here in Japan, right? Whether it's on the medical device level, whether it is in all sorts of aspects. So I think that, the fact that you do have this technological revolution that is going on, right? Actually, is a huge opportunity for the supply effects, right, to actually benefit the overall economic welfare. And that's, I think, where I very much agree with Professor Yoshino, right, that at the end of the day, this is not about debt sustainability or something like that. The real question is one of the overall economic welfare, and the overall economic welfare, right, if you look at nominal, right, incomes, right, at least over the last 8 years in Japan has actually started to rise, because the real deflation problem was not price deflation, was the fact that wages, right, actually declined structurally from 1995 until the year 2012. And those now, finally, we're starting to get positive, wage and income gains. Now, finally, the real challenge, since the theme today is what happens post-COVID, right? The real challenge here in Japan, as well as everywhere else, is that obviously over the last 18 months, we had massive intervention from the public sector in the private sector. Wages fell, but incomes rose, right? With all these support programs, right? That the Japanese government, as well as the American governments and the European governments have implemented. The real question is whether the withdrawal of these wage and income support measures, right? Whether that withdrawal can actually be managed smoothly. That's the real challenge that there is. In my personal opinion, in Japan, it will, because of the structural shortage of the labor market, while I am very worried that Mr. Biden in the United States, right, will have a much, much more difficult time to actually manage the withdrawal of the income support measures that they have put into place. But that's just an opinion.
Jesper, it would be wrong to describe you as a perpetual optimist. But,
no, I just think you need to frame you need to frame the question, right?
Okay, but you use the phrase if they can only let loose or let go. I mean, the various reforms you've been talking about and the momentum that's building up. What is preventing it from showing through, and is this going to change? I mean, Japan is a very conservative society in many ways, and that seems to have been a restraint on innovation and on many improvements. So is that going to change, or isn't it?
No, but look, I mean, but this is very interesting, Anthony. I mean, look, I mean, the reality is, and Yoshino-sensei, please chime in, you will have your opinion, but I mean, this is a low growth economy. If you look at GDP, this thing can generate, 0.5% to 1%. I mean, it's just the nature of the beast. And you can talk about total factor productivity, and there will be positive cycles and there will be export boosts. But I mean, the reality is that if 1 in 4 people is over the age of 70, you're not going to win a gold medal. It's just not happening, right? And so that's, I think, a reality that you're facing with. Now, the question is whether a low growth domestic economy, right, actually constrains the corporate sector to be globally competitive. Right? And there I would proposition, with all my optimism on the metabolism that is now rising amongst corporate leadership, both at the top level, at the established dinosaurs, plus the new venture capital, corporate startup, ecosystem that is starting to develop in Japan, that in terms of innovation, productivity, and look, as an investor, at the end of the day, I don't care about GDP, I care about profits. The profitability of corporate Japan, I think has huge upside potential, despite the fact that, yes, it's a low growth economy.
Well, can I just comment about innovation? I think in general, innovation comes from the demand side. Consumers prefer many, many new things. And if the population is very young, producers has to innovate by their own products. But nowadays, there are lots of innovation in elderly society. Wheelchairs in Japan is much, much better than other countries, and so on. So that demographic change has created lots of innovation, but not for young people, but for elderly individuals. Those kind of innovation can be exported to Korea, China, where they will be facing with the same problem in near future. So I think, and another one is innovation in Japan was very slow because banks are very conservative and in the past to lend money. However, lots of new innovative money is coming in together with the crowdfunding. So I think that will be improved to the innovation. And also thirdly, the employment system has been drastically changed. In 20 years ago, many young graduates would like to go to a big company. But now many started to open their own innovative companies and so on. So I think the supply side of the workers will be changed and financing will be also changed. So I think that will create lots of innovative mind in near future. Thank you.
Thank you. Paul, I can see a question on the floor, but do you want to very quickly make a comment on those points or not? We can come back to you.
No, maybe just make one comment, trying to tie a couple of threads together here. And you're going way back to where Professor Yoshino started on the ESG and the greenness, etc., and linking into some of Jesper's comments as well. One thing that I find fascinating, I did a lot of my early academic work on sort of the unique aspects of Japanese corporate governance, of all these mysterious things, main bank system, cross shareholdings and lifetime employment, etc. One thing I find very fascinating sitting here in the US and hearing so much these days about sustainability, corporate social responsibility, ESG, etc., is that the way in which the world is shifting, and Friedman, last year, of course, Milton Friedman, the 50th anniversary of his famous exhortation to managers to just focus on profit maximization, he's completely verboten now, and all of the movement is towards sort of corporate social responsibility. Japan has already kind of nailed that. And Japan started out and then moved towards shareholder value maximization, but it's never quite got there. So I think there's an interesting kind of arbitrage opportunity in some sense for Japan to claim, I don't know if it's a gold medal, but to sort of say, hey, all of this stuff about ESG and about corporate responsibility, about stakeholder orientated capitalism, that's our bread and butter. We know how to do that, and we also know how to take care of shareholders. I think there's an opportunity here for Japan to market itself and get some recognition and have more of a seat at the table. With the innovation story, what I observe here again in the US is just how often Japan seems to be forgotten or overlooked. It is the third largest economy in the world still. It is an innovation machine. It has great technology, and yet it doesn't claim its right sort of seat at the table. And I think that's something that I think needs to be perhaps addressed.
Interesting point. Mehdi, you had a question, I think, please.
Thank you very much. As you know, Japanese population is declining very sharply. And also Japanese policy for the accepting immigrant is still very strict and not successful. How do you think this affect the Japanese economy and productivity in the future?
Jesper,
no, look, I think this is obviously a key point. When you find that a company like Hitachi has problems attracting domestic engineers just because there aren't any, where do you go? You have to go outside, right? And I'm, again, with the topic at hand being what happens post-COVID, right? The fact that effectively, and still today, the doors are shut, right? Nobody comes in. that as a result of that, it's not just at the university level, but at the corporate level, all these trainee programs, right, that Japanese companies have started, and some of them have done excellent work, right, in hiring in China, in Vietnam, in Indonesia, you know, at the already high school level, and then training these people up, bringing them back to Japan to spend 1 or 2 years as trainees here in the local factories or in the local centers, and then moving back, right? All of this has come to a standstill. And that needs to really start very, very quickly, because you are absolutely right. You know, I mean, from a capital perspective, right? You know, either capital goes to labor or labor goes to capital, right? And so it's great to see that METI says, fine, we actually want to attract top-level semiconductor technology from Taiwan. We want you to build new factories here in Japan, but that is not going to work if you don't at the same time open the door for more top-level global engineers to actually work and develop, you know, in these factories. So your point is, this to me is the real structural issue. And it goes into something that Paul alluded to, right? Why is Japan punching below its weight at the global innovation table, when objectively, you know, if you look at patent applications, if you look at some of these metrics that, I mean, innovation is difficult to measure, right? But, you know, Japan is perfectly fine in terms of, there's lots of smart people, lots of patents, et cetera, but why is it punching below its weight in Silicon Valley or in Israel, right, for example? You know, the reason is that the market here is still very, very closed. Because at the end of the day, right, innovation happens, I mean, what do I know? But I mean, innovation, a lot of it happens at the meeting point between different disciplines, at the meeting point, right, between different types of industries. If you've got that exchange, then it gets interesting. But because Japan is closed, because in Japan, the bulk of the applicable innovation happens at the corporate level, right? You know, and when you look at Toshiba, even Hitachi, when you look at the silos that these engineers and scientists and innovators face, right? From there to have interaction with an Israeli engineer or scientist, with an American, you know, entrepreneur or scientist, that's the real hurdle, right? That needs to be lowered in order to unleash that power and in order to give Japan greater acceptance, right? And greater recognition at the global innovation table, right? They're locked in their silos. Get them out.
I think immigration is important, but we have to also deal with the retired people because they stay there. So new employment is important to produce, but we have to utilize those retired people, and because they cannot just rely on social welfare and pensions because that population is aging. So I think both has to go as a dual wheel, I think.
Okay, Paul, are you itching to make a comment? Or if not, don't worry if you're not. But
no, I think I addressed this issue before. I mean, and of course, you know, it's not for me or Jesper to speak on his behalf to sort of lecture to the Japanese about what they should do with their immigration policy. But, you know, as a policy option, as a societal option, Japan has an opportunity, if it decides to make this choice, to really use immigration to solve whatever problems it thinks it has with the aging. But it can do it on its own terms, in its own way. You know, there are potentially lots of benefits to get from that. But I think what Japan also, you know, I lived there for 17 years, so I know kind of have a little bit of an insight from the Japanese perspective. You know, I think the social capital in Japan is so important. You know, Japan has an incredible social capital, stock of social capital. And, you know, I think there's a way of having your cake and eat it too. That is to use strategic immigration to, you know, invigorate the economy, to get a lot of benefits from immigration, but at the same time, integrating those people into the society and preserving social capital. And I would just point out, again, as a long-term resident of Japan, you know, I've never met a foreigner who comes to Japan and doesn't fall in love with the place and start to become more Japanese. Start to adopt Japanese sensibilities. So, you know, if Japan can figure out how to do this in the right way, it's a win-win.
Very good point. Jesper.
Can I just make one comment on that? And this, you know, obviously very much agree with Yoshino sensei and Paul's thing, but just, you know, the practical problem is, right, that the A team of engineers doesn't want to work for a Japanese company. Right, and the reality there, you know, is again, it's all very nice. And I mean, what's the name? I'm not a baseball guy. What's the name of that baseball guy who beats all the records in America right now? The Japanese guy, Otani-san, right? I mean, you know, why do the top guys leave, right, from Japan, and why don't the top guys come to Japan? You know, and at the end of the day, this comes back to the one fundamental issue, which is that, you know, the way, you know, human capital, the way your employees are being compensated effectively happens on a seniority basis rather than on a productivity or pay for performance basis. And that is, you know, one of the great, you know, I would say challenges, you know, and one of the great obstacles, right, ultimately to immigration as well as to greater productivity within corporations. Because in Japan, the reality is if you work for an established company, right, and you're a Waseda graduate, right, and you are 8 years into the job, and, you know, why would you move to a competitor? You know, you would basically get slotted back in exactly 8 years graduation, 8 years from Waseda, right? Your benefits and your income package is not going to change very much. So the only reason why Japanese domestically, why they change their job is because they don't like or they don't get along with bucho, right? With their superior. That's why you change, which is a negative incentive rather than a positive incentive. Hey, I'm good. I can make a difference, and yes, I can actually make 20, 30, 40% more by moving to a competitor, right? So that's pay for performance culture, and it links very, very strongly with the immigration debate, because at the end of the day, it's not about kitsui kitanai kiken, right? It's not about, you know, attracting the low-level workers, right? It is about attracting the top teams, right? From MIT, from Stanford, from Paul, where are you from? Australian National Universities, you know, from the Max Planck Institute. That's the guys that you want in order to really give a revitalization kick.
Okay. Jesper, I can't let you go without asking you very quickly. You made the point that Japan can take over effectively from some of the role of China in supply chains. I mean, we all know that the US is trying to bifurcate supply chains and establish alternative suppliers. So why would Japan be able to take over from
Because
China?
they're the only guys who do this. If you want a factory, if you and I are building a new factory, you know, there's exactly 3 companies who can get you the best system. And of the 3 companies, 2 of them happen to be Japanese. You know, if you want a robot, I mean, you know, well, how many robots? How many top-level robot companies are in the world? Of these, 2/3 are Japanese.
Yeah, but is it going to happen, do you think?
Of course it's going to happen. If Mr. Biden has his way, America loves a Cold War.
So he will turn to Japan as a...
No, it's not that they turn to Japan. You have nowhere else to go.
Yeah. Okay. All right, well, we are, I'm afraid, about out of time, unfortunately. I mean, very interesting discussion for which thank you all. Thank you, Paul, for coming in from New York. Thank you, Yoshino Sensei, and thank you, Jesper. We do have 1-year honorary memberships for you, Yoshino Sensei, for you, Jesper, and
Paul, I will use yours as well.
Paul, your 1-year honorary membership is winging its way to you. But
if I can get into Japan sometime in the next year, I will definitely be using it.
Well, please come and talk to us in person. All right, well, thank you very much, all of you, and we're most grateful. Thank you very much.
Thank you very much.
Thank you.
Thank you.